In the next 60 seconds, one man's words delivered from a quiet lodge in Wyoming could add or erase thousands of dollars from your 401k. His decision could change the interest rate on your next car loan or determine the future of the housing market. This isn't a movie. This is the annual Jackson Hole Symposium. And this is the story of the 2025 Powell speech and why you absolutely cannot afford to ignore what happens next. To understand the weight of this Powell speech, you need to understand the impossible situation the Federal Reserve is in right now. The Fed has two primary jobs, a dual mandate given to it by Congress: keep employment high and keep prices stable. For years, these two goals work together, but today they are in direct conflict. Let's look at the data. On one hand, the job market is showing serious signs of weakness. The latest reports show that hiring has slowed to a crawl. This is a red flag for a potential recession. The Fed's instinct here is to cut interest rates. Lower rates make it cheaper for businesses to borrow money, invest, expand, and hire more people. It's the economic equivalent of hitting the accelerator. But here's the problem. While the job market is cooling, inflation, the rate at which prices for everyday goods and services are rising, is still too hot. It's above the Fed's 2% target, and in recent months, it's actually started to tick back up. The main tool the Fed has to fight inflation is raising interest rates. Higher rates make borrowing more expensive, which cools down spending and brings prices back under control. It's the economic brake pedal. So you see the dilemma. Hitting the accelerator to save jobs could send inflation flying out of control. But slamming the brakes to fight inflation could send the economy skidding into a recession. This is what economists call a stagflationary risk: stagnant growth and high inflation. It's a central banker's worst nightmare. And Jerome Powell is standing right in the middle of it at the Jackson Hole Fed meeting, preparing to tell the world which pedal he's going to push. So why does this all come to a head in Jackson Hole, Wyoming, of all places? This annual meeting, hosted by the Kansas City Fed, started as a quiet academic conference. But it became the Super Bowl of monetary policy because it's where Fed chairs have historically chosen to make their biggest announcements. It's an exclusive gathering of the world's most powerful economic minds. The seclusion and seriousness of the event mean that when the Fed chair speaks here, the world listens, and the stakes are very real. In 2022, Jerome Powell gave a speech here that was much tougher on inflation than markets expected. The result? The stock market fell by over 12% in the next month. A few sentences wiped out trillions in value. Conversely, in 2024, a more optimistic Powell speech here signaled that rate cuts were coming, sending markets soaring. This history has created an intense expectation. The Jackson Hole Fed meeting is no longer just a discussion, it's a performance, and the lead actor's script can rewrite the financial future. So, as Jerome Powell takes the stage, he faces three distinct paths. Let's break down each scenario, what he might say and what it would mean. First, the dovish pivot. Dovish is Wall Street slang for being focused on economic growth, not fighting inflation. In this scenario, Powell's speech would signal that interest rate cuts are coming soon, maybe even next month. Why would he do this? His main concern would be the weakening job market. He'd be choosing to prioritize preventing a recession over squeezing out the last bit of inflation. He might say something like, "The risks to our employment mandate have grown," or "The time has come for policy to adjust." He would essentially be declaring a partial victory over inflation and shifting the Fed's focus to protecting jobs. The immediate market reaction would likely be positive. The stock market would probably rally, as lower interest rates are like rocket fuel for stock prices. This is the outcome that many investors are hoping for. We're about to break down the second, more dangerous scenario, and then get into exactly how each of these paths affects your mortgage and your 401k. If you're getting value from this detailed breakdown, do me a favor and hit that like button right now. It takes 1 second, but it tells the YouTube algorithm that this is important information, helping more people find this video. Thank you. Now let's get back to it. The second path is the hawkish stance. Hawkish means the Fed is laser-focused on crushing inflation, even if it causes some economic pain. In this scenario, the Powell speech would be a cold shower for the markets. He would emphasize that the inflation fight isn't over. and that it's too soon to even think about cutting rates. His reasoning? Credibility. The Fed's biggest asset is the public's belief that it will keep prices stable. If Powell pivots too early and inflation comes roaring back, that credibility could be lost for a generation. He might use firm language like, "Our work is not yet done," or "We will remain vigilant until the job is finished." This would be a shock to the market. Stock prices would almost certainly fall, potentially by a lot, as investors would have to adjust to the reality of higher for longer interest rates. This is the scenario that could cause significant short-term pain in your investment accounts. Finally, there's the third and perhaps most strategic path: the data-dependent hold. In this scenario, Jerome Powell plays his cards close to his chest. He would acknowledge both the weak job market and the sticky inflation, and conclude that the Fed needs more information before making a decision. He would stress that the Fed is not on a preset course and will remain data-dependent. This is the cautious approach. With major reports on jobs and inflation coming out before the Fed's next meeting, why commit now? The market reaction to this would be uncertainty. There wouldn't be a clear rally or crash, but likely a period of volatility as investors try to read between the lines. This would essentially kick the can down the road, making the next few economic reports even more important. Okay, so we've covered the theory, but how does this cascade down to your actual wallet? Let's connect the dots. The Fed's interest rate is the foundation for almost every other rate in the economy. If we get the dovish pivot and rates are cut, your next mortgage or refi will be cheaper. The interest rate on a new car loan will be lower. Your credit card's variable APR might tick down. Your stock portfolio and 401k will likely get a boost. The downside: the interest you earn in your high-yield savings account will drop. If we get the hawkish stance and rates stay high, borrowing money will remain expensive. Mortgage rates will stay elevated, keeping pressure on the housing market. Car loan and credit card rates will remain high. Your stock portfolio could take a hit. The upside? Your savings account will continue to pay you a very attractive interest rate. And if we get the neutral hold, everything stays in a state of suspense. You won't see immediate changes, but the uncertainty could make banks more cautious about lending. The most important thing is that the direction of your personal finances for the next year hinges on which of these paths Jerome Powell signals in his speech. So there you have it. The Jackson Hole Fed meeting isn't just an abstract economic event. It's a critical moment with direct consequences for your financial life. No one has a crystal ball, but by understanding the Fed's dilemma and the potential outcomes of the Powell speech, you are now equipped to understand the headlines and what they mean for your money. You know the playbook. The situation will evolve rapidly after the speech is delivered. To stay updated with clear, no-hype analysis of what happens next and how to navigate it, make sure you're subscribed to the channel with all notifications turned on. It's the best way to ensure you don't miss critical updates. And now I want to hear from you. Based on everything we've covered, what is your prediction? Head down to the comments right now and let me know if you think the Powell speech will be dwarfish, hawkish, or neutral. I'll be down there reading and responding. Thank you for watching, and I'll see you in the next video.